Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. This is going to be a very interesting article I read. It can be very controversial because this guy's saying the gold to silver ratio will keep going higher. We already saw it as high as 125 to 1, which means it takes 125 ounces of silver to equal 1 ounce of gold. That is an extremely high ratio, and I definitely think it should correct or normalize or equalize lower back towards the 75 to 1 range, or the ratio around that. But this guy's saying it's going to go higher, so I'm curious to hear what his beliefs are, what his rational explanation is for this. So before we start, make sure to smash that like button, make sure you subscribe because I post daily videos. So the gold to silver ratio has been rising for 9 years. Many commentators are looking for a top with silver to start outperforming gold. This article explores why this will not happen and the implications. So which would you choose, gold or silver? I'm curious for you silver stackers, or you precious metals enthusiasts. What do you choose, gold or silver? Gold is still seen more as safe haven. Silver is more of a industrial metal used in the industrial world. Silver shortages, we know. I definitely think I'm going with silver. I'm trying to make big bucks in the future, and I definitely think silver is the undervalued asset with the most potential. So there are many commentators suggesting that the gold to silver ratio is nearing a top at present. I am one of those people. I guess I'm a silver commentator, and I'm definitely saying this as well. Here and here are good examples. I am not of this opinion and consider that will keep climbing for the next 10 years at least. Below is a chart of the gold to silver ratio. So he's saying this is going to keep climbing for the next 10 years. So how high would it be? We know. So let me give some backstory. It comes out of the ground roughly 8 to 1. There's a silver shortage, right? Historically, it was 2.5 to 1, and in the 30s it was manipulated from 16 to 1 to 75 to 1. So it comes out of the ground 8 to 1, and actually much smaller than that because a lot of silver is lost in technology. So for the ratio to keep climbing, that means the gold has to keep outperforming silver, and I don't believe that will happen. But anyways, as you can see, the chart shows that the gold to silver ratio hit a high of 125 on March 18th, 2020, and has since declined back to 111 as of today. It is likely over the time to retest and break the recent highs and keep climbing higher. And that's interesting because it depends, right? The gold to silver ratio is a great tool to see which metal is the better investment. The analysis. To understand why the ratio is going to keep climbing, we need to look at how silver and gold are used. Below is the breakdown of percentage used of silver in the U.S. So uses of silver in the United States. So, blue, 35% is electronics and electrical, 25% is coins and metals, 10% is photography, 6% is jewelry and silverware, 24% is other. As you can see, 45% is used in photography and electronics. The other categories, 24%, is a mix of energy use, brazing and soldering, chemical production, mirror production, medicine. In the total, therefore, 69% is used in the industry. Only 31% is used in jewelry and coins, silver kept in circulation. See, that's what I was talking about. A lot of silver is lost. Where a lot of gold, a large portion of gold is used for jewelry, used for coinage. A lot of gold is recycled, reused, rescrapped, remelted. Below is a breakdown of the percentage uses of gold in the U.S. See, a lot of gold is used in jewelry and electronics, and so industrial use is only 37%, but 58% is used in coins and jewelry kept in circulation. So a lot more gold is kept in circulation. So as of 69% used in the industry and 35% in gold, only 35%, silver is much more sensitive to the strength of the economy than gold is. The last economic cycle in the U.S. was the weakest in modern economic history. The real potential GDP was 1.6% from 2008 to 2018. This is the lowest 10-year rate since before the Second World War. The gold-silver ratio is therefore doing exactly what you would expect it to do in a weak economic backdrop. It is steadily rising. If the economy remains weak after the present recession, I would expect the gold to silver ratio to continue to rise. So will it remain weak? Which is a good point, right? Since silver is more closely tied to the economy since it's used in the industrial world, then it would make sense, right? It could make sense if we see silver pegged to the economy. If the economy is dropping, then silver might drop as well. But I see a lot of other factors in silver, and that's just in the U.S., right? We see a lot of other factors that's going to keep silver higher. right? Whether it's the shortage, whether it's, whether it's production, whether it's the supply and demand, the surplus, whether it's the scarcity, whatever the case is, we definitely see a lot of potential for silver. So here is a link in the latest Hosington Investment Management March report. Their conclusion is that growth and inflation will remain weak despite the massive money printing and stimulus presently being rolled out by the U.S. government and the Federal Reserve. I heartily agree with this analysis. Below is the long-term chart of the U.S. GDP. Now, the thing about this article is, and actually some people commented about this, is he's basing this solely off the United States. We are on a global scale, though, right? This is a global situation, so you can't base it off of just the United States. If U.S. was the entire globe, maybe the situation would be a lot different, but U.S. is a much different situation scenario than Peru or Mexico or Australia or even China for that. So anyways, growth peaked during the Second World War. And is steadily falling since then. Since the war, the average growth is falling at 0.7% of every 10 years. As the U.S. government and Federal Reserve are insistent on bailing out all industries and companies, productivity will remain low. This is because the weak companies will not be eliminated, allowing a reallocation of the capital from the weak to the strong. Below is population growth of the U.S. economy for the last decade. So you can see from 2010 to 2020, it's rapidly risen. The 2019 growth rate was 0.6 of 1%, with slow population growth and slow productivity growth. The growth rate of the U.S. economy must remain weak. GDP growth is the product of change in population growth and the change in productivity growth. If both are weak, GDP must remain weak. So here are some implications. For investment, not trading purposes, it is clear that if the gold to silver ratio keeps climbing, gold will outperform silver on a long-term basis. If you like precious metals to diversify your portfolio, you should buy gold and not silver. See, this article is very interesting, and it's definitely going against the grain, and that's why I wanted to share it. I don't want every article to be, all good for silver, all, bullish for silver. I want to share both sides of the fence. I want to share different perspectives, different angles, because this is going to shed light on, the realities. Not everyone is very green on silver, but his article doesn't he only is basing this off the United States, right? He's not basing it off of many other factors, and he's only looking at one little part of the entire grid. So it is good to see some different perspective and to remain, optimistic on this stuff, because, gold has benefits, right? Gold is a great way to store a lot of money in a small area. Gold, you can store $100,000 in a shoebox. You can't do that with silver. But silver has so much potential on so many other aspects. So I don't agree completely with this article. I think he missed a lot of context that I would love to question him about a lot of stuff, because he's only looking at one little window of a much bigger picture. Right? If you're only looking at the things he said, then yes, but there's much more on the table than what he's talking about. So, he goes on to say, I presently have no exposure to any silver mining stocks, although some of my gold miner produces silver by byproduct. Don't be fooled into thinking that just because the gold to silver ratio has hit a high is now falling, that it means it will revert. We are in a low growth environment for the foreseeable future, and the ratio will behave accordingly. So some of the comments are actually pretty funny. This is the one. Where's the one I was reading? So, you have made one huge error in your justification of prognosis. Everything is in U.S. centric. The USA is not the world. The world has far greater use for silver than the USA does. See, he's looking from such a minimal and minuscule perspective. He's missing a lot of it. And as I was reading those comments, a lot of people are agreeing with the thing as well. See, silver is my choice to definitely buy now. See, there's different, like the 3 to 6 month chart for silver is very bullish, and gold is more of a safe haven. Silver has more uses in where we're needing it. We need silver, right? We need silver. If you want the latest newest iPhone, you need silver. So not always is gold going to be king, right? The gold to silver ratio is equal around 50 to 60 to 1. So who's going to say 140 to 1 is right? Just because the economy is heading worse, it's actually giving silver more of an opportunity. As silver is gold's big brother, as silver is gold's little brother, and silver follows suit usually when gold does. It's more volatile. Gold rises 10%, silver is going to rise 17%. So if gold keeps rising, expect silver to do so as well. So anyways, I wanted to share this very controversial article with you guys and hear what you had to say. If you did enjoy this video, if you thought it was educational, informational, or just entertaining, make sure to smash the like button. Also make sure you subscribe because I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.